Thank you so much, Minister Afri, for those welcome remarks. And you did highlight the word of the day, which is delivery. So before we get further into the program, I just wanted to go to this section right now where we're going to hear from representatives from both the V20 and the G20 about their experience about weather-related impacts and what is happening in their respective jurisdictions and their vision for climate resilience, particularly in the context of international cooperation. So to kick us off, we have Sabiti Fred, National and Technical Advisor on Environment and Climate Change at the Ministry of Finance Economic Planning at the Republic of Rwanda. Over to you.
Yeah, thank you very much, Excellencies, Honorable Ministers, all protocols observed. To begin with, most countries on the globe and most important in Africa endowed and depends on the natural resources for the people's livelihood. Tourism, mining, agriculture, to mention but a few, have been the backbone of the most economies for centuries. However, most of our economies dependent development have not fully taken strong and sustainable economic shape. This is due to the fact that little consideration was given to the sustainable investment with a wider range of stimulus packages to stem the sustainable economic impact, considering the country-specific and global effects of climate change. The international obligations, as enshrined in the Paris Agreement, requires and advocates for global efforts to reduce the greenhouse gas emissions slightly below 2, to be specific, 1.5. However, this will require maximum efforts from each and every country. This requires countries to put forward sustainable investment policies and strategies and explore innovative financing approaches to enabling institutional investment in climate-smart infrastructure projects in emerging markets that can help close the climate investment gap. For the case of Rwanda, the country is increasingly experiencing the impact of climate change. Rainfall has become increasingly intense, and the variability is predicted to increase by 5 to 10% by the year 2050. These changes in temperature and precipitation and their distributions are drivers and weather-related disasters that negatively affect the economy, including through drought, floods, and landslides, which results in damages to infrastructure. However, Rwanda has taken a strong stride to combat the effects of climate change through putting in place policies and strategies that support and incentivize the national sustainable development agenda. The country's Vision 2050, as well as the 50-year strategy for green growth and climate resilience, is built and advocates for the infrastructure and systems that enable low carbon growth and sustainable resource use, the nature capital and associated spatial development under the National Land Use and Development Master Plan that ensure sustainable development and the human capital development and economic inclusion that will build the resilience of the Rwandan people. Investing in climate smart industry alone will contribute to our country's GDP by almost double, from 18% to 33% over the 2020-2050 period. For this to happen, investing in climate resilience infrastructure needs to be strongly supported to urgently mobilize and attract new investments to drive prosperity. This will activate a targeted development and investment agenda to bring prosperity through the climate sound economic action, while strengthening global cooperation for the fighting climate change and building back better from the COVID-19 pandemic. Rwanda has developed the implementation framework for the NDCs with a clear financing framework, including the internal and external resources to be implemented for both mitigation and adaptation interventions until 2030 time horizon. We call upon our partners to be with us in this journey as we develop bankable proposals for resource mobilization. In conclusion, as the theme states, we are all affected and therefore we are all at risk. We need to combat the effects of climate change as a global challenge if we want to have a better planet than the way we found it. All of us will need to rethink twice on development agenda, consider and embed climate resilient interventions in respective countries' policies and strategies, and provide an investment pathway for infrastructure development projects and economic programs to accelerate zero carbon growth, build greater climate resilience, and also boost socioeconomic development. I thank you very much.
Thank you so much for those words, I think it shows how acute climate impacts is in Rwanda, and if we heard from the minister earlier as well in Ghana, and how important resilience is to ensure clean and sustainable growth going forward. So from Africa, let's go to the Pacific, and for this slot we have Vinay Narayan. He's the head of climate change and international cooperation at the Ministry of Economy at the Republic of Fiji. Over to you.
Sorry, guys. I think Fiji is currently at the COP26, and I think the plenary has run overtime. So perhaps we can move to the next speaker. Thank you.
Right. I'm just going to check. We're still in the Pacific. If we have the representative from the Philippines, Paula Alvarez, perhaps she might also be in the meeting as well. So why don't we forge ahead and go to the U.S. And for that perspective, we have Leonardo Martinez Diaz, who is the Senior Director for Climate Finance at the Office of the U.S. Special Presidential Envoy for Climate at the Department of State in the U.S. Leonardo, over to you.
Hi, can you hear me all right?
Yep, loud and clear.
Great. Thank you very much for inviting me and for inviting me to share some of the perspectives from the U.S. Let me just give you a very high-level fact here. We have also suffered a number of climate-related events in the United States. What's clear is that it's becoming more and more frequent. Consider, for example, that if you take the average from 1980 to 2020 of disasters affecting the US, costing more than $1 billion each, that number during those 30, 40 years was on average about seven events per year. But if you take the last 5 years, that number has increased from 7 to 16.2. So almost a doubling, more than a doubling of $1 billion plus disasters per year. And this is becoming, I think, pretty clear, not just in the statistics, but also to our people across the country, whether it's wildfires in California or unprecedented floods in the Midwest, ruining lots of crops, to, of course, more intense and frequent hurricanes on the East Coast and the southeastern part of the United States. People all over the country report that they are now experiencing the impacts of climate change in a way that they didn't used to. In this regard, the US is no different from other countries. I think we're all feeling it, as the title of this talk clearly suggests. In fact, as President Obama yesterday mentioned in his remarks, for those of you who caught them, 85% of the world's population has now suffered from impacts exacerbated by climate change. You know, before we used to always preface things by saying, you know, we have these events, they're not new, of course, we've always had floods, we've always had fires, and we can't really say how much is caused by climate change or exacerbated by climate change. We can no longer say that. We now have increasingly sophisticated attribution science, which allows us to pinpoint just how much more frequent and severe or severe events have become because of climate change. And so I think that is in some ways helpful, because it helps us build a case for why we need to take climate action on both resilience and mitigation. I think one of the key elements of this talk here is what does resilience look like, right? It can't just be a bumper sticker. It can't just be a term of art in our negotiations. It has to also become operationalized. And that's what we're all struggling to do. And I'd like to offer that there's sort of four elements of what adaptation and resilience can mean. One of those, the first, is we need to know what's coming. That is to say, we need to have a much better understanding of the risks that we face. And this is why initiatives such as the ones you're announcing here today, including the GRMA, are so important. We need to empower our communities to understand where the risks are coming from and how severe they are, which infrastructure, which communities are most likely to be vulnerable. Without that, we are flying blind, and that makes it very difficult to prioritize investments in adaptation and in resilience. The second component here I would offer is the ability to bounce back faster. We will inevitably be affected and continue to be affected by these impacts, but we need to put in place mechanisms that allow us to rebuild, recover, and provide relief much more quickly. And the quicker we can bounce back, of course, the lower the economic and the human impact of these events. And those elements include, of course, insurance, include prearranged finance, but they also include stronger institutional capacity to provide that type of relief and that type of recovery. The third component I want to argue here is that we also need to stop doubling down on bad, risky decisions. That is to say, can we ensure that we are not building more in areas that are clearly at risk? Can we encourage our private sector to ensure that they're making climate risk-informed decisions through better building codes, through better zoning regulations, through a variety of rules and procedures that help our people make better decisions ahead of time before disasters actually strike, and that we stop making decisions that just create more and more risk. We can see this already in the United States, where we're looking at our flood insurance program. Congress is looking at flood insurance and really asking folks to make decisions about where to build, what real estate to buy, what commercial and residential property to invest in with climate change in mind. And finally, we of course have to think about protecting the most vulnerable. This is not just an international issue, it's an issue within our own countries. In every country we have, of course, people who are more exposed, both because they are poorer, have less resources to flee a storm, have less resources to recover because they may have less access to things like savings, insurance, credit, and all of these things make it more difficult to bounce back quicker. And so we have to think about where they are and how to protect them first. We, of course, have a gender component to vulnerability. We have also a generational component. In the US, some of the most affected populations tend to be the elderly, those who live alone, those who may be more exposed to, for example, heat waves, and there's fewer safety nets to protect them. So in that sense, I think we're talking about things that we all share across countries, and really a common challenge that hopefully dialogues like this one can help us advance. Finally, let me say that President Biden launched last week the President's Emergency Plan for Adaptation and Resilience. This is a whole of government initiative that will serve as a cornerstone of the US government response to international adaptation and resilience. And you will see us talk about this program. The acronym is PREPARE, very appropriately, so that we can continue to help all of you and enable all of you to put in place the investments that we need. Back to you, Butch.
Thank you so much, Leonardo. We're a little bit ahead of time, but let me just, perhaps I get back to some of the people who spoke earlier, if we do have time. But just to be sure, I want to check on the Philippines again, if there's the representative from the Philippines who's available.
I think we see a Philippines colleague on the line, just to double check that they're still online.
Okay, Sarah, why don't we just proceed in the interest of time, and I'll do one more check if after our next speaker. For our next speaker, we have Jürgen Sattler, Director General for International Development Policy at the Ministry for Economic Cooperation and Development, or BMZ in Germany. Jürgen, over to you.
Thanks a lot. Thanks a lot for having me. And I really can say, same picture here as Leo Martinez from the US just told you. Also in Germany, we are facing more frequent and extreme weather events. They are compound with other challenges at the moment with the pandemic, as you know. And you also have heard about the floods in the west of Germany, devastating impact on livelihoods, on businesses, many lost lives, damage to critical infrastructure. It's about 29 billion euro, I think around 1% of German GDP. So it's really substantial. And it seems that preparedness was not perfect. Early warning systems did not work well or were not used properly. So this is something we have to look at. And apart from the floods, we see more frequent droughts in many areas, particularly in the east of Germany. And this, of course, affects agriculture. It affects river transport, and then related to that, industrial production. At least for the time being, Germany can absorb these losses with its fiscal capacity. But of course, we see a different picture when we look more towards south, and the impact often is bigger, and losses often reach critical dimensions in relation to national budgets and income. So Leo just told you 4 lessons. I think this is also the case with regard to Germany. Perhaps one point, now we get aware that investing in resilience is really the cheaper option than to cleaning up afterwards. And perhaps these disasters have one positive implication, is that people and we get more aware of that fact. We have to invest now. It's not cheap. It costs to invest, making our economies, our life more resilient, but it pays out. Over to you.
Thank you so much, Jürgen. It's actually quite striking to hear from Germany that these terms about lack of preparedness and also there could be an early warning systems could have been enforced earlier. To think about Germany being hit by that, I guess it's an indication on climate change that the past is not a reliable indicator of the future. And I think Leo was also saying that in the context of the US. Let me check again on the Philippines one last time. If we have the representative from the Philippines. So I don't think there is the representative from the Philippines. So we actually have a few minutes to cover right now. So why don't I go back? I have a question for Leo, if you're there. The extremes that you're experiencing in the US, I mean, the US is such a big land mass. Is this something statewide that you're seeing? Is it only in certain hotspots? What is the observation there? Just to make it more, just because the US is so big as a land mass, how is this manifesting itself in the US?
Thank you for that question. I think we thought initially that the climate impacts would be most visible primarily on the coastal areas in the Atlantic, where places where hurricanes and extreme rainfall, for example, are reasonably common. We're talking about the Gulf Coast, Florida, and then even parts of the Eastern Seaboard. And we have discovered, though, that that's not only the places that are vulnerable. The fires in California, really, which begin to hit record highs in 2017 or so, really began to educate all of us that climate impacts come in many different types. And then in 2018 and 2019, we saw devastating floods in the Midwest, which of course is far away from the coasts. It doesn't have nearly as many fires, but then that flooding, which destroyed lots of crops, really, I think, helped to convey that no part of the country is safe. And because all of these things happened in relatively short time, in about a 24-month period, it really brought home the message that climate change is here, and that we are, as Jürgen mentioned, no longer in a stable system where the past is really a good guide to the future. And so this has been, I think, obviously tragic for many people, but helpful in the sense that it has underscored how important it is to confront the challenge. And it has brought more awareness of the problem in the United States.
Okay, thank you so much, Leonardo, for those insights. Jürgen, in case you have anything to add, let us know if that's also the case in Germany, if that's something that you are seeing across all parts. You did mention the floods that happened recently over summer. Is it something that is also you're witnessing all over Germany, and is that an isolated event? Only if you have further thoughts that you want to share about that.
Yeah, I mean, it's quite obvious. It's not an isolated event. I think we can see the frequency increasing. As I said, it's more compound, and it affects all parts of Germany, perhaps in a different way. Some is, very kind of isolated. Others is long onsetting, of course. We also have these problems with our forests, for example, and also the droughts. It's not only an extreme event, but in some regions, the frequency of rain is really decreasing, and agriculture is struggling in the east of Germany with water shortages. There are all these things which you all know, but it's getting really obvious, and there's almost no part of the economy which is spared.
Thank you so much, Jürgen. I thought it was just interesting to understand a little bit the context in Germany and the US, simply because I think at some point, we've been hearing so much of what's happening in developing countries, but the issue is really permeating in developed countries as well, as you've highlighted. So thank you for those extra insights. So we've had a rich discussion today. We've seen how in the V20 economies and also in developed economies that climate change is really manifesting itself in more extremes. That's happening not only in isolated areas, but also really countrywide, in the case of the US, statewide. And we've had ideas here of what we can do better, what people are thinking about as a vision, better understanding risk, knowing that the past is not a reliable indicator of the future, being able to bounce back, making sure that we reach out to the most vulnerable first. And that's really consistent also with the spirit of the SDGs of leaving no one behind. Now that we've set that context on impacts that's happening in different jurisdictions, let's move on to the second segment of the event today, which really delves into analytics and models. And I think this touches on what we discussed earlier as well of the value of better understanding risk. And this is really part of the risk management continuum that the first port of call is really understanding risk and being able to quantify it before you can start preventing and reducing. And in the context of transferring, also looking at financing solutions like insurance. And for this segment, we will start off with a message from Amal Krishna Mandal, the Joint Secretary for the Economic Relations Division of the Ministry of Finance, of the People's Republic of Bangladesh, and also the V20 presidency. Over to you.
Thank you, Mr. Bakkani, and thank you, distinguished speakers, for the valuable perspective just provided. As we seek to jointly build resilience through international solidarity and shared responsibility, I would like to underline the importance of data models and risk analytics for resilience building. According to the latest IPCC report from August 2021, climate change is now in a constant state of acceleration, and this can only spell economic and financial disruption and destruction while leaving behind devastation for the world's most climate vulnerable developing countries. Excellencies, colleagues, we face the most difficult questions. Which lands to preserve? What parts of our culture to secure? And what might be consigned to oblivion with the rising tide? We constantly ask ourselves, what happens when our people are forced to move against their will? To stave off irreversible ruin, how exactly do we maintain our financial and economic resources as physical shocks grow in severity? To climate-proof our economies and thereby secure the livelihoods and prosperity of our people, we need to understand the risks we face. This requires the building of climate risk data, especially local and country-led data, promoting data sharing and model accessibility, as well as capacity strengthening for risk assessment and planning resilience investment. As we need to accelerate the expansion of financial protection mechanisms, climate-sensitive macro-fiscal and economic planning and investment in climate-proof growth, the Insurance Development Forum and the V20 signed a milestone agreement less than a week ago. The collaboration with the IDF is hoped to deliver one of the missing puzzle pieces: enhanced collaboration on strengthening our understanding of risk. I am pleased that through the Global Risk Modeling Alliance, the Insurance Development Forum takes up the V20's call for a global public-private partnership on risk analytics and resilience made at the V20's first Climate Vulnerables Finance Summit in July 2021. As envisioned by this collaboration with the IDA, the private sector should be fully engaged in further building this capability. I recognize the deep expertise of the insurance industry in risk management and applaud the investment the industry is making in open risk platforms and open data for this purpose. Equally important, the V20 call upon the G7 and the G20 to join us in this effort as a significant part of creating a more resilient world. Without further ado, I would now like to hand over to Ms. Ekuswe Hen, Secretary General of the IDF, and Mr. Nick Moody, Program Manager of the IDF Risk Modeling Steering Group, who have been instrumental in establishing this collaboration, and our moderator, Mr. Gus Bakkani. Thank you.
Thank you so much, Joint Secretary Mandal, for those words for this particular segment. And let's welcome Ekuswe Iyahen, Secretary General of the Insurance Development Forum, or the IDF, with us, who's also with Nick Moody, Program Manager of the IDF Risk Modeling Steering Group. Welcome, Ekuswe. Nick, it's good to see you again. It's been some time. Ekuswe, the Joint Secretary did just highlight the collaboration between the IDF and the V20. Can you expand a bit on that collaboration and the value that brings for V20 economies?
Great, thank you, Butch, and it's great to see you and the fantastic work that you're also leading with UNEP, PSI. So to your question, as you know, a fundamental value proposition of the industry is really the risk analytics, the information that we use to support the provision of insurance solutions. And earlier this year in June, when the V20 had its first Climate Vulnerable Summit, there was a very clear statement in the communique that was issued that identified the financial protection gap as a real challenge for V20 countries. And as part of that, there was a clear statement and a call to action made for the establishment of a public-private partnership focused on risk and resilience analytics. So as the Insurance Development Forum and the collaboration and the discussions that we've been having with the V20, we felt that it was our responsibility as an institution led by the insurance industry, but obviously with the public sector partners like the UN, the World Bank, to really respond to this challenge. And for the V20 countries, it's important because in dealing with climate change and impacts of climate change, a key pillar of that has to be deepening the risk the understanding of the risks that exist in countries in order to inform not only the provision of solutions, but also to drive, I think, greater traction around the conversations that we're having around adaptation finance. So for us, it's really a pleasure to be able to respond to such a demand. And as I said before, I think it is really a responsibility of the industry to respond to the V20 countries on this particular issue.
Thank you so much, Akuswe, for those words. I want to, we have a little bit of time, so I want to make sure that Nick gets to speak as well. Nick, how can this collaboration that Akuswe just described to us, if you really put the V20 economies front and center, how can this collaboration really help mitigate macroeconomic and macro fiscal risk?
Absolutely. Well, good day to everybody, and thanks so much for the opportunity to comment here. I was just riveted by some of the statements that I've heard earlier, particularly just the last one from Bangladesh. So I think what this is all about is about making it real. You know, we have all these high-level policy statements and, if you like, a lot of global perspective. For example, at events like this at COP26 in Glasgow. But really, this is what this is about, is making it practical. So I'd like to make a couple of comments. One is, I guess, at a practical level, how can it help? But also then maybe talk a little bit about the behaviors that we're hoping to encourage in terms of global and local collaboration. So at a practical level, what this is all about is reducing uncertainty. We're all trying to work out what's going on in what is in the climate, what is fundamentally a chaotic system, and not just the climate, but the way that populations change, the way that exposures change on the ground. And the best way we think to do that is by integrating global and local knowledge to produce financial risk metrics that can unlock flows of finance, whether that's for investment or whether it's for risk transfer. We think that this can help at the macroeconomic level. We think this can help build a layered risk finance strategy to incorporate those things that I just mentioned around investment, for example, in adaptation, and knowing where actually it makes more sense, rather than continuing to put capital into building resilience, to actually transfer the risk to markets that are better able to shoulder that load. There is also a practical aspect, which is about showing the benefits of information in other ways. For example, in terms of zoning, we heard earlier, of building codes, of building resilient infrastructure, or indeed the cost of doing nothing, the very high cost of doing nothing. Because what this leads to is protection of capital stock, protection of supply chains, and of course, obviously, that's going to feed through to more stable production output and greater pricing stability in the economy. But I'd also like to point to, I guess, a couple of broader ways in which this practical help will be of benefit to economies. And that's the first one I'd point to is around building trust and confidence. It seems obvious to me that many of the countries, well, all the countries on this, are at the front end, on the front line when it comes to climate change. And therefore, those are the places where the hard decisions are being made. And yet in the global supply of risk analytics at the moment, most of the investment is in the global north. And it's kind of being fed, as it were, passed on to the global south. But it doesn't really make sense, I think, that where the hard decisions are being made in the most climate vulnerable countries, those decisions should be made on somebody else's view of the risk. So what this is about is bringing the analysis and owning the analysis where those decisions are being made sustainably, so that countries are able in the long term to develop and manage their own analysis to inform their decisions at a local level. So that in turn builds great trust and confidence. We hear over and over again that if the analysis is based on local research, taking as well the best that can be provided by global research, but if it's all integrated, then there's greater trust and confidence in the output. And we suggest that this will improve access to capital markets through better communication of financing needs, because what we're doing here is we're building a shared language of risk.
Thanks so much, Nick, for those words. I guess if I understood it correctly, I think one of the key words you mentioned is owning the analysis. I think another, if I understood that collaboration correctly, it's also enabling V20 economies to be able to do it. If you look at the industry, I mean, jargon that's used in the industry like probable maximum loss, PML, 1 in 100, 1 in 200, return periods, risk tolerance, risk appetite. This is something that's everyday language in the insurance markets. But in a way, did I understand it correctly that this capability that's been in the industry is something that the IDF would like to bring and empower for V20 economies? Is that a good summary of what I understood the benefits are? Yeah.
Yes, I would say that's a very good summary, Butch. Thank you. The reason is because there is a certain language that is required in order to be able to converse it on an equal basis with international markets. And also there's just a certain language around, if you like, the discipline of understanding risk that brings together academia, public sector research departments, and also and we have in fact already been able to do this, for example, in pilot projects in the Philippines and Bangladesh. It is taken to its extreme reinsurance businesses. It's quite a complex affair, but it doesn't have to be. And one of the things the IDF is doing is investing in making open platforms, using open data standards, investing in making this a good deal more approachable and less complex for technically capable users in countries who maybe are not so used to this language.
Maybe I can add a bit to that, because I also think that there's a lot that the markets can learn from countries, right? There's a lot happening in countries, in academic institutions, in technical institutions, etc., to tease out the risk. I always say that local people know their risks, right? Mm-hmm. And so for me, this collaboration, yes, it's about the transfer, yes, as you mentioned, some of the jargon, the technical thinking and tools that exist in the industry. But it's importantly, from my perspective, really understanding from the country's perspective, the risks that they face, how they think about that risk, how they manage that risk or not manage that risk. So I just wanted to put that on the table in terms of viewing this as a cross-fertilization between the skills of the industry, but also very much the skills and the capacities that exist in many of our V20 countries.
Thanks so much, Ekosway. So it's actually a two-way street. That's what you're saying.
This is very much it's built into the design. This is very much about co-development or co-definition of programs and co-development of local capability. Absolutely. And just if I could just add to what Ekosway said there, one example of that is those metrics that you just described there, Butch, can also be adapted. So very often, I think in the global north, these metrics are used to measure risk, for example, for financial loss to property. But what we're aiming to do here is broaden out this methodology so that countries, V20 countries, will be able to measure, for example, human impacts or impacts on natural capital.
Right. Okay. I'm gonna go back to you, Akiswe. I just have another question for Nick to challenge you, Nick, a little bit. Why has it taken so long to deploy this risk expertise? If you really look at the history of the insurance industry, one can say like catastrophe risk modeling, that's another jargon, really took off after Hurricane Andrew hit Miami in 1992. And there was a lot of the combination of science, engineering, risk, insurance came together. So in a way, a lot of this has been innate in the industry over time, but there seems to be an alignment of stars right now that is enabling this to happen. But can you just give a reason why it has taken so long when it seems like the opportunity has been so ripe for so long?
You know what? Doesn't it seem obvious when you put it that way, Butch? Absolutely. It should have happened 20 years ago. I mean, I would say there are a couple of things here. One is that this bringing together, as you say, of multiple disciplines to calculate risk is something that has taken time to develop. And frankly, it's been really quite expensive as well, which might explain partly why it's not been so possible for countries with fewer resources to be able to join that effort. But secondly, I think what you've seen, what you're witnessing here is a coming together of private and public and indeed humanitarian resources that is unprecedented. And for example, the IDF has only existed for 5 years. And this is one of the first things that the IDF got working on. So I think the implication of your question is that it is long overdue, and I 100% agree with that. But I have to say I'm very glad that it's starting to happen now.
All right. Yeah. Okay. I could say add on. Yeah, and then I'll ask another question for you.
Yes, maybe I was reflecting on your question. I think it's a great question, Butch, but I think maybe part of what we are seeing is a response to urgency. I think that with the COVID-19 pandemic, and also, yes, with climate change and the rise in the conversation around adaptation and resilience, I think that has perhaps spurred greater interest within various communities of the need for collaboration. So I do agree with you completely. It's taken way too long, but I do think that the experiences over the past, I would say 2 years, or a little bit more than that, have been what has driven some of the key progress and willingness to overcome our silos to try to address this issue.
Okay, now my question to you, Ekiswe, is that let's connect this, because this is largely an understanding risk assessment agenda. Let's connect this to closing the financial protection gap, which is what we need to do and what's the topic today. How does this link to sustainable access to climate smart insurance solutions? Can you just connect those two worlds? Because for some, it may be disparate to say like, oh, that's risk modeling and risk assessment, that's risk transfer on the other hand, but this is actually linked together.
Yeah, I'll try to describe it in very simple terms, which is, for capital to move, you need transparency, right? You need transparency in terms of what are the risks that you're dealing with. Oftentimes when we hear, okay, there's a financial protection gap, there's a protection gap. To actually do that, you need to invest in the risk analytics, right? That will help you to unpack what is that risk that I'm faced with, and what are the possibilities in terms of how I manage that. And so let's take, for example, if we're looking at drought risk and the experiences that I've been involved in a number of programs in Africa, it wasn't just simply, oh, we need an insurance solution, or let's just pick something out of the air or something developed in the London market. We literally had to work with the government counterparts in the various countries to try to understand if there's a deficiency in water, what does that mean in terms of impact on crops that most people are dependent on as a source of livelihood? Then translating that a step further to saying, okay, what are the impacts in terms of governments if you were to respond to those people? So it's really trying to unpack what this liability is that a government that sits on a government's budget, or even a community, or a household's budget, and then using that to inform what are the kinds of solutions that we need to be implementing. And those solutions can be financial, but those solutions can be fundamental investments in reducing the risk. And so the efforts that we are putting into this risk modeling endeavor by the IDF with our partners is really to accelerate that thinking within many of the governments that we are exchanging with, which is deepen the understanding of the risk, but begin to use that information database to drive solutions. And for me, this is where we make the connection between the work that you're also leading with UNEP, PSI, and the Sustainable Insurance Facility, the work that we are also trying to achieve under the tripartite agreement. And without that investment in the risk analytics, it's a lot of speculation. And so for me, this is really the heart of, if we are going to close the financial protection gap, then we must have that investment in the risk and resilience analytics piece of it. And it also extends, frankly, into the conversation, as I say earlier, around adaptation. And that, for me, for V20 countries, is a very important practical, financial, but also political question.
Thank you so much, Ekeswe and Nick. I think my takeaway is that basically risk is the currency that must be understood by everyone, and it's that shared language that we need to understand. And this piece on understanding risk and analytics and modeling is actually not a nice to have. What you're saying is that this is a prerequisite. This is a prerequisite to make sure that there is sustainable access to risk transfer solutions and financial mechanisms such as insurance. So time is short, but I really enjoyed our good way to reconnect with the both of you. And I think there is a lot of promise here. The collaboration just started, and we look forward to having another opportunity to see and where we are in terms of progress in a few months' time. This, as we said, it's long overdue. So we need to fast track and make up for the lost time over the years. Thank you so much, Ekeswe and Nick. Let's move on to our next segment and really bring the discussion and to the topic today about insurance for MSMEs. And for this segment, now the Philippines is here. And we have actually, we also, we have Sarah Ahmed. She's actually from the Philippines, but she's from the V20 Secretariat. She's the financial advisor at the V20. But she'll be sharing with us and contextualizing the importance of climate smart insurance solutions for MSMEs in developing countries in particular. Over to you, Sarah.
Thank you, Butch. Excellencies, distinguished guests, speakers, and other colleagues on this call. Yeah, my name is Sarah Jane Ahmed. I'm a V20 finance advisor, and it's my pleasure to be speaking with all of you here today. So as we have just heard from Mr. Mandal from the V20 presidency, currently vested in the government of Bangladesh, and IDF colleagues, understanding and addressing the climate-related damages to our sectors and industries is instrumental in protecting our economies and thus livelihoods and people. Climate smart insurance for micro, small, and medium enterprises, as well as cooperatives, has an important role to play in this context. One aspect of climate smart insurance I would like to highlight is its ability to accelerate the transition to low carbon production through access to renewable energy infrastructure. As we have heard today from His Excellency, Dr. Afriye, keeping climate change below the 1.5 centigrade limit is the cornerstone of a suitable risk management strategy, allowing V20 economies not only to survive, but to thrive. As such guarantee-like insurance products that cover projected energy savings for energy efficiency measures could assure micro, small, and medium enterprises, MSMEs, and technology providers that the financial gains from energy efficiency measures will be sufficient to pay for any loan taken. As a result, there is greater incentives for MSMEs to invest in energy efficiency savings, for example, through decentralized renewable energy such as rooftop solar, and more security on the side of the technology provider and the financer to grant MSMEs access to credit. One of the desired spillover effects is that over the medium to long term, MSMEs will be able to translate the generated energy savings into better productivity and investment space. Moreover, in the event of weather-related shocks, decentralized energy systems can be expected to be more resilient overall. But even beyond that, several other spillover effects can come from building climate-smart insurance markets for MSMEs. If we take climate risk insurance, for example, one common challenge in V20 economies is the lack of awareness of climate risk and their financial impacts on MSMEs' balance sheets. If introduced prudently, climate risk insurance can not only provide financial liquidity in the event of climate hazards, it can also help to improve MSMEs' literacy of climate-related and financial shocks and financial risks when accompanied by sound advisory on business continuity planning and climate-resilient business models. Climate risk insurance can thus help climate-proof our industries. Lastly, I would also like to mention how climate risk insurance for MSMEs may positively impact a country's macroeconomic and macro-financial and macro-fiscal fundamentals. In many V20 economies, MSMEs make major contributions to employment, government revenue, GDP, export revenues as well. Better access to liquidity in the event of disasters may not only accelerate recovery, but also prevent businesses from closing down completely, thereby helping to protect employment opportunities. Furthermore, it can also reduce contingent liabilities for subnational and national governments. And finally, by aiming to ensure swift recovery, insurance may also help stabilize supply chains in the event of disruptive climate shocks. Ladies and gentlemen, we all agree that climate smart insurance is only one of the many puzzle pieces, but if introduced as part of a broader ecosystem and linked to agendas focusing on financial inclusion, productivity, and climate resilience, it can play an important role in safeguarding the prosperity of our economies and people. Thank you.
Thank you so much, Sarah, for those words and really contextualizing how climate smart insurance would benefit that middle part of economies that's largely a backbone of many V20 economies, which is MSMEs, and contextualizing it not only in simply about absorbing financial shocks and resilience, but also enabling the low carbon and net zero transition itself in V20 economy. So there is also a mitigation component here that was even highlighted there on low carbon energy infrastructure, in addition, obviously, to being able to be resilient to climate shocks that can happen. So at this point, I'd like to call on Kathy Chetnil-Kitchener, the climate envoy of the Republic of Marshall Islands, who will make an important announcement and on behalf of the Ministry of Finance of the Republic of Marshall Islands.
Good afternoon, Excellencies, distinguished delegates, partners, and guests. My name is Kathy Chetnil-Kitchener, and I'm Climate Envoy for the Marshall Islands, which is a member of the V20 Troika and co-chair of the high-level consultative group of the Ensure Resilience Global Partnership. The past days at Dhaka Glasgow Declaration by the CVF and the announcement of this V20 partnership with the IDF. We still have a long way to go for this COP to deliver the Climate Emergency Pact and the delivery plan for the USD $500 billion in climate finance from 2020 to 2024. Climate field risks are accelerating and we must make resources available. On behalf of the Ministry of Finance for the Marshall Islands, it is with great pleasure that against this background, I am now announcing the official launch of the V20-led Sustainable Insurance Facility, the SIF. The SIF seeks to enhance the development and availability of climate-smart insurance solutions for micro, small, and medium-sized enterprises. As such, the SIF addresses the key requests of V20 members to provide access to financial liquidity and protection for some of our most important economic actors, as also just highlighted in the keynote by the distinguished delegate. Ladies and gentlemen, the SIF has come a long way. The need for comprehensive and climate-smart insurance solutions for MSMEs has first been highlighted in 2017 at our V20 regional consultation in the Asian Development Bank in Manila. Since then, two key partners of the V20, the UN Environment's Principles for Sustainable Insurance and MCII, together with the V20 Secretariat, have taken forward this request and developed the SIF as a project pipeline development facility. Building on extensive consultations with V20 finance ministries, industry stakeholders, civil society, and academia, the project proposals that will be developed by the SIF will center on the 5 SIF action areas. Solutions will be based on thorough climate and financial risk analysis for SMMEs and the insurance sector, and thereby aim to build a business case for the local insurance industry. Furthermore, solutions will consist of bundled insurance products designed to enhance climate value at affordable levels and support access to finance, ultimately aiming to bolster MSMEs' investment and integration into regional and global value chains. Equally important, implementation based on SIF project proposals will include actions to enhance the financial and climate risk literacy of MSMEs. For example, through offering risk and climate-proof investment advisory to build informed insurance demand and sustainable uptake. Moreover, building on the most recent decision by Insure Resilience, SIF proposals will also aim to channel international premium and capital support to the micro and meso level. Excellencies, ladies and gentlemen, let me conclude by expressing my appreciation for the support by some of our key partners, including the Insure Resilience Solutions Fund, Global Parametrics, and MCH. I would like to specifically thank UNEP PSI for hosting the SIF project office to be set up in 2022 and the Asian Development Bank for the joint steps that we are already taking together in the context of the first SIF implementation step in the Philippines and soon Fiji, Bangladesh, and the Marshall Islands. Most importantly, however, on behalf of the V20, I would like to express my gratitude to the Insure Resilience co-chair, the German Federal Ministry for Economic Cooperation and Development, and thank you for supporting the SIF. The SIF addresses a key gap in the current disaster risk finance architecture and is the first vulnerable country-led implementation mechanism in this space to date. As climate change is accelerating at unprecedented pace, we too must accelerate action at unprecedented pace. Through the SIF, we hope to achieve exactly that. Thank you.
Thank you so much for those words. And I think with that, the SIF, or the Stable Insurance Facility that's led by the V20, is officially launched. And as was mentioned, it clearly addresses a particular segment, which is micro, small, and medium-sized enterprises, knowing that there are sovereign insurance solutions out there. There's also solutions at the household level. And so it does plug a gap there in terms of what can be done to bridge that financial protection gap that exists and is being exacerbated by climate change. And the BMZ was thanked there as a supporter from the G20. And I'd like to call back Jürgen Zattler again to reflect upon this announcement by the V20 on the Sustainable Insurance Forum. Over to you, Jürgen.
Yes, thank you. And also thanks to our colleague from the Marshall Islands and the nice words about Germany. Really, we are very happy to work with you in this partnership. And we came together to celebrate the launch of another step, which is the V20-led Sustainable Insurance Facility, SIF for short. And this facility will foster the development of insurance for micro, small, and medium enterprises, as has been outlined. This is crucial to achieve resilience in the face of climate-related hazards in the global south. I and my country, my government, we are really pleased to support this important effort with 1.56 million euros in the coming years. In economies in the global south, MSMEs account for up to 80% of the overall GDP. In emerging markets, 4 out of 5 new jobs are created by MSMEs. This is about 90% of the total population, and this illustrates that MSMEs are really critical drivers of economic growth and of social development. They form, in fact, the backbone of most, if not all, local economies, and strengthening the resilience of these enterprises will strengthen the resilience of the people. I go back to the year 2017, there the InsuResilience Global Partnership was launched as a global initiative led by the G20 and the V20 countries, and the then V20 chair Ethiopia and the then G20 chair Germany were the key drivers to get the partnership going. Ever since, Germany has been a very strong supporter of V20 endeavors, especially through our role as co-chair of the InsuResilience high-level consultative group, and together with our esteemed colleagues from the Republic of the Marshall Islands. All InsuResilience members, and these are 110 by now, are united behind the InsuResilience Vision 2025. This is the collective global effort to strengthen the financial resilience of poor and vulnerable people. And the launch of the Sustainable Insurance Facility is another milestone in achieving this goal and this vision 2025. The first SIP projects will be launched in the Asia-Pacific region. From our long-standing partnership with the V20 countries, we know that small island development states have very specific needs and vulnerabilities. In fact, 10 out of 15 countries with the highest exposure and vulnerability are small island states. Very often, current market-based solutions cannot address these specific settings and leave many, many people unprotected. The CIF, I'm sure, will address this gap efficiently and is therefore an important building block to close the protection gap. What we see here today is a remarkable example of international cooperation to support vulnerable countries and vulnerable people. I would like to thank all parties involved in this initiative for their continued efforts to make the CIF happen. It's the V20 group, the Climate Vulnerable Forum, the UN Environmental Programme's Principles for Sustainable Insurance Initiative, and it's also the Munich Climate Insurance Initiative. Looking forward to see the CIF bear rich fruits in terms of enhanced financial protection against climate risk. Thanks to everybody. Over to you.
Thank you so much, Jürgen, and thank you again to BMZ for supporting this initiative, and particularly the project office that will be hosted by UNEP to really take the CIF into action and to drive real-world impact. And so we are also excited at UNEP to really get going with this, because the idea has finally materialized, and we know that solutions are urgently needed on the ground to make this happen. So let me call our colleagues again. We have Sarah Jane Ahmed from the V20 Secretariat, and also our colleague Victoria Seifert from the Munich Climate Insurance Initiative. who both have been so instrumental and have worked so hard over the years in getting us to this point. Sarah, I just wanted to, you did touch a little bit on it earlier, but I think it would be good to frame the thinking on the resilience and the low carbon transition, because sometimes I think it's overlooked that there is a low carbon transition here. This is not simply about shocks, right? Absorbing shocks, but also enabling that low carbon transition. Did you want to just add anything to that point, Sarah, on what climate smart insurance really is for an MSME?
Thanks, Butch. In relation to the low carbon transition, when we look at price stability, when we look at low cost power generation, renewables is the answer. The issue is the high upfront cost of capital, as well as interest rates, high interest rates. And so what insurance can do is de-risk financing and investment in order to lower the cost of capital and thus make these more viable. And so just to your question on climate smart insurance in relation to the SIF. So what we're looking at is two broad types of insurance products. On the one side, the SIF will aim to develop project proposals that focus on designing new climate risk insurance products for MSMEs, which means products that protect both MSMEs from potential damages associated with climate impacts, as well as looking at enabling the low carbon transition through guaranteeing, for example, energy savings, as I highlighted earlier in my intervention. Energy efficiency insurance also is a way forward where we de-risk the MSME's investment in small scale energy efficiency tools or units. So the reason the SIF's focus is on these two areas overall is because it seeks to enhance productivity and growth of MSMEs through insurance products. Lower electricity costs, lower energy use is an opportunity for MSMEs to actually reduce their overall costs and thus use that revenue or that extra sort of resources and invest that in something else. The other point is that the SIF also looks to support with better access to risk management and the access to liquidity in the event that disasters strike. So from 2022 onward, the SIF will therefore aim to work on these targets through its indicative country pipeline. And this includes, for example, the Philippines, Fiji, Bangladesh, and the Marshall Islands for V20 members in Asia and the Pacific. And then Ethiopia, Kenya, Rwanda, and Ghana for the V20 from Africa. And Costa Rica, St. Lucia, and Haiti for V20 members in Latin America and the Caribbean. Thank you.
Thank you so much, Sarah, for those insights. And I'm going to turn to Victoria right now. Victoria, one of the key features of the SIF is it's V20 country-led, right? But we also know that it's been framed to be a pipeline development facility. Can you just help us demystify a little bit what that means? How do proposals come about? How do we manage that? And how would that lead to solutions? Perhaps you can help demystify that and also bring into light the action areas that were mentioned earlier by the Republic of Marshall Islands. Over to you, Victoria.
Yes, sure, Butch, and thank you. So as you just said, the V20 country leadership will be key for the respective proposal development process. And the SIF is really envisioned as a project pipeline development facility, as you have just outlined, which means that the SIF project office, which will be hosted within UNEP FI PSI, will work very, very closely with the respective finance ministries who wish and request for SIF implementation within their respective countries in developing the SIF project proposals. And what this will look like more specifically is that SIF project proposals will build on in-country consultations with the respective finance ministries, as well as other key stakeholders from the domestic insurance industry and key MSME sectors as a starting point. And the intention of those in-country consultations is to really identify the target group bottom up, identify the concrete insurance needs of that target group bottom up, and then to develop actions in line with the 5 CIF action areas that we have developed as part of the conceptualization of the CIF that was led by the V20 through the extensive consultations that we had in 2019 and 2020. And in order to sort of describe that process very briefly, together with the CIF Project Office, those proposals that will be developed will then be submitted to key partners, funding vehicles for disaster risk finance, such as, for example, by the Asian Development Bank. And we will hear from colleagues of the Asian Development Bank later today. And I think with respect to the identification of the target group, the insurance needs, and the 5 CIF action areas that I have just touched upon, I would also like to expand a bit on what Sarah has just mentioned in the context of climate smart insurance products. And I think it's important to note that the CIF will not only focus on insurance instruments as such, but as we have learned from the consultations with the V20, as well as with other stakeholders, building informed demand, specifically through enhancing MSME's climate risk and financial risk literacy, also plays an important role. And the CIF will be looking to develop products that integrate the corresponding advisory services within the risk transfer transaction. And similarly, we also saw that the strengthening of distribution channels, the identification of scalable distribution channels, will be critical for the implementation of the CIF, and the in-country consultations will be instrumental for that process, because they are supposed to enable country leadership not only through the strong guidance by the V20 finance ministries, but also through identifying suitable in-country implementation partners, for example, business associations, for example, cooperatives, which can function as aggregators for MSME demand and support product distribution, which can take on these tasks once these proposals go from the development stage to the submission to the implementation stage. And I think throwing it back to you, Butch, in light of these requirements, right, that I just outlined, that Sarah just mentioned, it would also be interesting to hear why specifically UNEP FI PSI is well positioned to host the CIF Project Office.
Thanks so much, Victoria. So I have an analogy based on what you said, the CIF as a project pipeline facility. So what we need to do at UNEP is to hire plumbers. So because we need to have the plumbing in place for climate smart insurance solutions defined by V20 countries to flow to MSMEs there. That's basically what we need to do. And that's what the project office is all about, is to set up that plumbing so that the pipeline of climate smart insurance solutions to MSMEs will flow through. Now, on the PSI context, for us, we're very pleased to host the project office. Number one, the PSI is the largest collaborative initiative between the UN and the global insurance industry. We have 200 member insurance and stakeholder organizations from across the world, including the global south, that we want to be able to tap for this. Secondly, that's the reason why I also asked Sarah about the low carbon transition, is that the PSI currently has the most ambitious net zero insurance alliance that is out there, that really uses the power of insurers as underwriters to transition their insurance portfolios to net zero emissions, which should match not only the adaptation and resilience ambition of the SIF, but also the support, potentially the low carbon transition elements of the SIF. And thirdly, we have innovative initiatives like the Task Force on Climate-Related Financial Disclosures, where we're really bringing climate risk assessment to the state of the art, the next level assessment of putting climate change scenarios at the heart of climate risk assessment by insurers, and be able to use the most sophisticated science and methodologies there to really quantify climate-related risk. And obviously, all of this is geared towards orienting to supporting the SDGs, making sure that we leave no one behind. So there's many things that we can offer in addition to that, but we're very happy to be working with partners like yourselves at MCAI, obviously with the V20, but also the Insure Resilience Global Partnership. All right, so let's go and to our next segment and really bring this to life and have a commercial insurer point of view on the V20. I'm hearing some background noise. So if you're not speaking, would be grateful if you could mute yourself. So this segment really brings to life what does this facility mean for commercial insurers. And for this segment, we have two speakers. First, I'm going to call on Dr. Cesar Mwangi from the CEO of the Isaiah Lion Group in Kenya, a leading East African insurer. Cesar, you've heard a lot about the context, about climate, about MSMEs. It would be so interesting, and obviously Kenya is part of the V20 economies. What is, based on what you've heard, what are your insights on this new insurance facility for MSMEs that has just been launched?
Yeah, thank you very much, Butch. Excellencies, wonderful colleagues, brothers and sisters from all over the world, trying to tackle this great challenge that we all have in our hands, which is not sparing anybody. And those of us out here in Africa are very concerned. We have really, really, really felt the effects of climate change, as all the speakers have mentioned. And no doubt we are extremely vulnerable. So I am from ICEA Lion Group, which is a group of insurance and finance businesses, 8 of them specifically in Kenya, Uganda, and Tanzania, which is East Africa. And we are very delighted because we have been members of the Principles of Sustainable Insurance since 2016, the first insurer in East and Central Africa in that case. So we're very delighted. And from what I've heard, I must say that I'm extremely excited by the launch of this sustainable insurance facility, targeting those small and medium enterprises, which make up a huge part of the economy, as our colleague from Germany very eloquently explained. And I'm extremely, extremely delighted. I just want to contextualize this for you as to why I am so delighted. Number one, we must realize that the insurance penetration in Africa, in Kenya, Uganda, Tanzania, in Africa in general, is extremely low. Actually, here in Kenya, it's approximately 2.4%, which is an extremely low level. I also want to contextualize and explain that the amount of insurance in the entire African continent, for example, the gross written premiums, I was just doing a quick calculation, and I was comparing the gross written premiums of insurance in Africa, the entire African continent, and comparing it to one of the large European companies like AXA. And I looked at the years 2015 to 2019, and the literal percentage of insurance in Africa gross written premiums is approximately 4 to 6% of one large European company. That's AXA. So it contextualizes for you the really low level of penetration. And we are living in a continent in excess of 1.3 billion people. And you find that kind of gross written premium is being written compared to one country, 4 to 6% of one European company. I think you can understand why we really need to up this game. This facility, I believe, can enhance that penetration of insurance because there's a large amounts of people and businesses that are not insured, yet they live in a very vulnerable situation. And climate change has made it even worse. I just want to contextualize for you the economic makeup, for example, which this facility can help. We need to understand that many of the African economies are largely built on agriculture. And of course, tourism, that's natural resources that we have, the wild animals, the parks, etc. And therefore, a lot of our businesses are geared in these areas. In fact, agriculture is the largest employer of people in most African countries. In Kenya, it employs the most, in excess of 35% of the people, and employment are in agriculture. So you can imagine that when climate change comes in and disrupts agriculture and the businesses involved in agriculture, there's a huge disruption to many, many livelihoods. We also have, of course, tourism. And I mentioned earlier that insurance uptake is extremely low. And the simple reason is that income levels for the majority of people are quite low. And all these business people, I can tell you for free, insurance to them is a luxury. And unless they find a way of being supported in a way, and I really have been very keen on words like aggregation. I'll give you a simple example. One of the biggest industries in many of the African countries, and those of you who have visited Kenya, Uganda, or Tanzania, is the transport industry. And the transport industry is dominated by motorbike transporters who purchase low-value motorbikes from China and other producers like India. And that is the form of transport. It's affordable. And many, many people are employed in what we call the border industry, which is the motorbike transport industry. It's the cheapest form of transport and most people can afford it. But very few of these people are insured. And we have horrendous cases actually of accidents and all sorts of things that happen. And, there's nothing that can be done. We simply get disrupted completely. So this facility, I believe, and Butch, I just want to mention, it is very exciting for us here in Africa, here in East Africa, that it will come in to bridge this gap. We are very keen on supporting the aggregation of many of these small businesses because that's the only way to go. We are very keen on developing technologies which can distribute these insurance products economically because it's just too expensive to distribute them if we don't have appropriate technology. In our own business, we have already introduced a digital micro-saving product, which is called DigiTrust, which is really a mobile phone enabled investment product where you can invest in the money markets from the comfort of your phone. And this is one of the things that we've done just to try and help in terms of resilience for these people in difficult times. They can put their savings somewhere and they can invest and put some money aside. So this is some of the things that we've been trying to do, but we believe that with this facility, we can actually collaborate with our governments. As we've been told, there's going to be a very good collaborative process, a consultation process between the Ministry of Finance, the government, and the stakeholders. We are very keen to participate in this process so that we can identify the best proposals moving forward, which can help a lot of these people. So Butch, I think I just want to stop there, but I want to state again, I'm very excited, very delighted, and I thank all of you very much for coming up with this wonderful fund and process. Thank you.
Thank you so much, Caesar. And obviously the UNEP headquarters are in Nairobi in Kenya. And for those who are not aware, IC Alliance is also the first African insurer to be part of the Net Zero Insurance Alliance. So there's a lot of commitment there, both on mitigation and adaptation. Let's move over to Swiss Re, a global reinsurance company that's obviously doing business across the world, both developed and developing countries. And for this part, we have Yusel Dekra at Swiss Re, who will be sharing with us his thoughts on the sustainable insurance facility. Yusel, are you there?
I'm there. I'm not sure if you can see me. I don't think you can see me, right?
Can't at the moment, but that's fine. We can hear you loud and clear.
Okay, then we do it that way. I'm sorry for that. Yeah, thank you very much for having me. I would like to share with you an insurance story today about climate risk, about micro and small entrepreneurs, and I hope that can serve as an inspiration for further projects. For example, within the sustainable insurance facility. So to stay with Kenya as a country, livestock is a major element of the Kenyan economy. And between 2008 and 2011, livestock losses in Kenya actually accounted for 70% of the total $12 billion in damages caused by droughts. So that's a huge amount. And in 2016, the Kenya Ministry of Agriculture, together with the World Bank and several other parties, they started the Kenya Livestock Insurance Program, or CLIP, it's also called. And it's a public-private partnership between the government and a consortium of 7 insurance companies, and it's reinsured by Swiss Re. Now, this program uses satellite imagery to measure the color of land. And by comparing 2 pictures, it basically tells if green food for livestock is available. And if none is available, then the insurance pays out. So farmers can purchase food for their livestock. Now, in 2017, there was a payout of $2 million to 12,000 pastoral households. So that's about $170 per household. And those funds helped to save 70,000 livestock, sustaining 100,000 people. So it's really quite big numbers. And that money is paid into bank accounts, mobile accounts, or it's distributed by checks. And in July of this year, there was also a payout made. Now, what makes this program so unique in my eyes is that instead of compensating for the loss of livestock, it actually prevents that loss. It makes the pastors more resilient, right? Because they can buy food for their livestock, and so the livestock doesn't die off. And I think Mr. Jürgen Sattler from BMZ already mentioned it's so much more efficient to invest now in resilience to prevent losses later. And due to climate change, I mean, these droughts will increase. So I think insurance programs like CLIP can make a huge difference to small and micro entrepreneurs and their families. And we're actually working on the replication of CLIP in many other countries. So hopefully we can do that. So this is just one example I wanted to share with you of how a concrete project can look like and can make a huge difference.
Thank you so much. Thank you so much for really making it really concrete, Yusel, on how insurance schemes could actually really be part of resilience building. Number one, that there are existing solutions there that could be amplified. And number two, that really this is part of reducing risk to begin with. So prevention being better than a pound of cure, so to speak. So I think the perspectives there from an East African insurer, from a global reinsurer, really helpful in terms of what is the potential of this facility in terms of really amplifying solutions, particularly in this context, MSMEs. Let's go to our next segment right now. And really, this is what brings SIF, in a sense, operational already right now, because there's already existing support, for example, from the Asian Development Bank, in particularly the Asia Pacific Climate Finance Fund that's being managed by the ADB in Manila. And for this part, we'd like to hear from Ms. Xiao Hongyang, the Chief Thematic Officer and concurrently OIC of the Chief Climate Change and Disaster Risk Management Division at the ADB.
Greetings, can you hear me okay, everyone? Greetings
yes.
from the G20 site. It's very exciting to meet all of you. And on behalf of ADB, congratulations for this. And there's something specific for V20. So I'm quite excited to really say something on behalf of ADB and congratulations. All of you, ADB and the Asia Pacific Climate Finance Fund, we call the ACNIF, welcome the launch of the V20 Sustainable Insurance Facility. We call it SIF, SIF. So we really look forward to an ongoing and much more closer collaboration that has started through the ACNIF support for the V20's SIF first project implementation launch in the Philippines. After this today's discussion, we are going to have a news release to launch this. So do watch the ADB website to download the news release. So ADB established ACNIF in April 2017 with the support of the government of Germany, Federal Ministry of Economic Cooperation and Development. We call it the BMZ. So let me go through a little bit on the ACNIF background. So ACNIF is a multi-donor trust fund managed by ADB. So it aims to unlock potential and capital for climate investment and improve the resilience through the innovative use of financial risk management products. To date, ACNIF has approved funding amounting to $10 million supporting climate risk insurance solutions, climate-focused startup companies, and expansion of renewable energy and green finance solutions. So the ACNIF Fund supports achievement of the targets of the Paris Alignment and complements over other international initiatives, such as the Insur Resilience Global Partnerships and its Vision 2025 target. So this is to cover 500 million poor and vulnerable individuals against climate and disaster shocks by 2025. So ECNIP is the first key partner who supports the V20 SIF in the development of the climate and disaster risk insurance solutions in the V20 economies of the Asian and Pacific. So in our present Massa speech, during the first V20 Climate Vulnerable Finance Summit that was in last July 2021, ADB highlighted the need and commitment of the close engagement of ECNIF with the V20's SIF. And in July 2021, the ECNIF approved the project to develop climate and disaster risk management and insurance solutions for micro, small, and medium enterprises. We call the MSMEs in the Philippines. So representing that is the first project implementation of the V20 SIF. As you all know, the MSME in the Philippines play a critical role in driving the economy and supporting the livelihood of low-income populations. The MSME accounting for over almost 100%. It is actually 99% of total enterprises and 63% of the total employed labor force. You can see how important it is. So therefore, it is so crucial for them to apply the risk management tools to better manage the financial consequences resulting from these shocks. So ECNIF is supporting the development of building effective business models for the introduction of the climate and disaster risk insurances for SMEs in the Philippines to ensure their resilience against extreme weather conditions. So ECNIF is now currently reviewing further applications that would also support the implementation of the climate risk insurances for MSMEs in Fiji. So also as part of this V20 SIF facility. So ECNIF and the V20 support for building the climate and disaster resilience for MSMEs aims to address the issue of inadequate insurance offerings designed for the segment of the market. So you all know, all the practitioners a while ago before me speaks about how how much needed of this segment of the market are not really covered by any insurance products. So looking forward, as driving forces behind the economies of developing countries, especially in Asia and Pacific, supporting the MSMEs not only support the resilience of the overall economy, but also the business communities, the owners, employees, everyone that serve. Many of them are really poor. So ADB and ECNIF welcome the launch of V20 SIF and very much looking forward to ongoing collaboration that will hopefully achieve a prosperous, inclusive, resilient, and also sustainable Asian Pacific. I stop here. Thank you so much. Can you hear me?
Stuck? So, yes. Thank you so much, Xiao Yongyang, for those words. All right, I got stuck in the mute button, but I think for me it's so interesting because the SIF was conceptualized at the V20 Asia Pacific meeting that was hosted by the ADB in Manila in 2017. So from conceptualization to operationalization, I think the ADB has been there. So thank you so much for your support, particularly through the Asia Pacific Climate Finance Fund, or ACLIF, for this SIF, for really bringing it to life instantly in Asia, particularly as kickstarting with the Philippines. So I think the mantra of the day has been collaboration, and there's so many willing partners that we have there. So why don't we continue that spirit of exploring collaboration and synergies. And let's move on to our next discussion. And for this, let's kick off with Rachel Turner, Director General for Economic Development and International at the FCDO, or the Foreign Commonwealth and Development Office in the UK. Rachel, over to you. There's been a lot of input already about what this facility is all about and what has been happening on the ground. It would be great to hear from FCDO on your insights.
Well, thanks very much. And, you know, I don't want to take up too much time, but first of all, I did just want to say congratulations on the launch of CIF. You know, from the work I've been doing, we've been very, very much focused on building that part of the disaster risk finance architecture that's focused on the sovereigns and helping the sovereigns to cover disaster risk finance and build the systems for money to flow through the public sector. And through both our work at the G7 and also our work at the COP, I think we've been really pleased and actually really excited by the way the growing maturity of the disaster risk finance system has really started to be understood actually as a core part of the wider international finance system, and kind of no longer spoken about as something that's happening a bit niche in a corner, you know, and really finding its feet as a core plank of the wider international finance system. But equally, it's so clear that there's so much more to be done. And I think particularly building the disaster risk finance system for micro enterprise, for small enterprise, building that part of the system that can help provide protection for critical services and public assets, that's still so much, it's so much needed. And so, you know, just really congratulations, I think, for this work and getting another, if you like, another plank in the disaster risk finance architecture in place. So clearly, there's going to be huge opportunities to collaborate across the system, and just looking at everybody that's on this call and everybody's working on different parts of it, we can see so many opportunities. And we're going to hear from Leo, I think, and from Malvern from the ARC, and Jerry from Global Parametrics, and Annette from the Ensure Resilient Solutions Fund. So, you know, there are definitely going to be so many opportunities for collaboration, and also with the you know, the multilateral development banks as well as the Asia Bank. So great work by the Africa Bank and by the World Bank as well. And starting to see this work go from step to step, I think gives us, a really strong foundation to build on. I do think there's a lot of work to do on collaboration and joint learning. I think we need to, go into all of this work with minds open for sharing analytics, challenging each other on analytics, making sure that the work we do on the modeling goes from strength to strength, that we start to share evaluation, that we know what works, that we start to feed the lessons across the whole architecture. So I'm really excited again to see the launch of the CIF, huge opportunity for collaboration, and thank you for asking me to say a few words. Thank you.
Thanks so much, Rachel, for expressing your support for this idea. And we look forward to exploring synergies with you, that there's getting more sophistication right now, more maturity on disaster risk financing, that we're really looking at the missing pieces there to make disaster risk financing solutions really flow at the scale and speed required. Let's move over and go back to Leo Martinez-Diaz, who spoke at the front end. Leo, you were sharing a little bit of what was happening in the US earlier. Now that you've heard what the facility is all about, it would be good to hear at the back end now, based on what you've heard, what do you think about the potential of this facility in terms of amplifying the solutions that we need?
Thanks so much, Butch. I think it's a very timely initiative because, as Rachel said, it moves beyond the sovereign level and down into the so-called meso and micro level. I think what's going to be crucial here is that the folks buying the insurance understand what they're buying. And that is essential because insurance cannot be the end itself. It has to be a means to an end. And that end is really the better understanding and management of climate risk by communities, by companies, by governments, right? And so in the process of helping folks understand the policies and the premiums and the coverage, that I think should be turned into an opportunity for capacity building, for imparting new knowledge and new capabilities so that folks understand the risks that they are facing and can manage them better with the insurance, but also with other instruments as well, and with other resources, including their own. So I think it's always about, for me, it's always about the process more than the product itself, as important as the insurance policy is, of course. Lastly, let me say that the United States is ready to help and to support these efforts. We just joined the Insure Resilience Global Partnership earlier this year. And there are a number of initiatives that have been started by the US that could have some useful synergies in supporting the CIF. Let me just list three of them. One is called the Green Recovery Investment Platform. This is a USAID program that incentivizes private involvement and investment in addressing climate challenges, including those affecting MSMEs. So perhaps there might be some synergies here that could be exploited. Also, the State Department and our National Oceanic and Atmospheric Administration, our science agency, will be working together in the Caribbean through a program called the Caribbean Islands Regional Climate Assessment Program, or CIRCA. And that program will be generating regional assessments for climate-related impacts and vulnerabilities in the Caribbean. Again, this could be an area of possible synergies. And finally, we have another State Department-run program called the Island-Led Resilience 2030 program, which seeks to build capacity of island nations to integrate climate data into sustainable development planning. So there is a part of the ecosystem where we're involved, and I would be happy to explore with you and with the V20 some potential areas for collaboration. Thanks again, Butch.
Thanks you so much, Leo. Also for not only for those ideas of potential opportunities that already exist that we can explore right now, but also on the conceptual level of really highlighting what was really important in the discussion so far, that this is insurance is a means to an end, and what we're really trying to understand is how can we better understand and manage climate risk to build resilience, where insurance really is part of the solution to build that resilience, both in terms of risk reduction and also when disasters do happen. So thank you so much for those thoughts, Leo. Let's move over and actually go back to Africa. And we have Malvern Chirume, who's the Chief Underwriting Officer of the African Risk Capacity. And underwriting is the art of defining, evaluating, and pricing insurance risks. So we have the Chief Underwriter of ARC here with us. Malvern?
Thanks, Butch, and good afternoon, everyone. Great to be to take part in this discussion. I'm still at COP, so I'm not going to actually show my video because there's quite a few people around. But yeah, so I also share the excitement, in terms of the launch of the CIF, bearing in mind that, as Cesar mentioned, there's at least 95% protection gap that still exists on the continent. So that just shows you that there's a long way to go. Yes, we have made progress on the sovereign, front, as Rachel mentioned, in terms of sovereign risk pool. But it's quite clear that if we want to bridge that at least 95% gap, depending on who you talk to, then we still have a lot of progress to make. So which is why I'm really excited about the launch of the CIF and also the announcement that was made last week relating to the to the modeling alliance in terms of trying to go open source, because this essentially takes out a huge chunk of the costs of the market development for insurers, because without models that are applicable to the various areas, then there's always going to be a cost element, and then that makes it less likely for insurers and reinsurers to actually move into markets. Can I also just maybe talk about the concept of insurance layering? So essentially, what I mean is that there are different sort of macro or sovereign approaches, but there's also what we call in ARC sub-sovereign approaches. So this is essentially when we look at meso and micro products, because essentially we have to attack the problem, from many angles. And the reason why we like to talk about this is because different countries are set up in different ways. So for instance, we have countries that are part of the ARC scheme that essentially buy into the whole our sovereign product. But there are also other countries like Rwanda, which are not yet part of the ARC scheme, that rely on, they have their own national agricultural insurance schemes. So we are also looking to work with them in terms of bringing them on board, because they have a different need, a different structure, which is why this insurance layering is very important, and also which is why the announcement of the CIF and this Global Modeling Alliance is actually of extreme importance, because it means that the time to launch in certain countries or in certain regions will be much shorter compared to before. And also in terms of this sort of, if I can call it a non-sub-sovereign approach, we are really model agnostic. We don't really care what model is actually, is being used, as long as that model captures the risk properly, then we are actually happy to also participate. So essentially, this is very great news for everyone, because this launch of CIF and also in conjunction with the modeling alliance, essentially takes care of quite a significant problem, which is the cost of market development, specifically setting up the models. And also just give an example on the microinsurance, we've actually started working with the WFP to reinsure some of the R4 rural resilience microinsurance schemes. So this just goes to show that if we really want to attack and close this gap, we're going to really have to put our thinking caps on. But also really grateful for the support that's been shown by Resilience, by FCDO, by the German government, by USAID in supporting, the ARC Sovereign program. And I only wish this venture more success, and we're really willing and very energetic partners, in this endeavor. Thank you very much.
Thank you, Malvern. You spoke like a true chief underwriting officer. Once you get into layering and risk and exposure, I think you get into that real technical jargon in insurance about what are possible solutions when you look at risk from different layers, and also risk and exposure. Now let's hear from Annette Detken, the head of Insure Resilience Solutions Fund Management. And obviously, Insure Resilience is co-convening this this event with us today, and has also been very strongly involved in the whole initiative. Over to you, Annette.
Thank you very much, Rich, for having the opportunity to join this important event today. And also let me join all the colleagues who have applauded the launch of the Sustainable Insurance Facility today. Speaking about the Insure Resilience Solutions Fund, the ISF, and the Sustainable Insurance Facility, it's not only that we share the same three letters in our acronyms. Actually, I'm very convinced that also in our activities, we are very much complementing each other's, and therefore we see a very high value in having the ZIF now here on board. So my congratulations here from Frankfurt. But in order to explain why I am so enthusiastic about the ZIF, let me just briefly introduce the Insure Resilience Solutions Fund and the areas where we are active in order to understand the links to the ZIF. So the Insure Resilience Solutions Fund is actually a product development facility for climate risk insurance products. And as such, we have been set up by KfW and are funded by the German Ministry of Economic Cooperation and Development. And we have actually three areas where we support the development of new climate risk insurance products. First is that we conduct climate risk analysis, and this has been pointed out several times, and which you mentioned it as a prerequisite actually for climate risk insurance. earlier, and this is why we are conducting these kind of analysis and offering this analytics in cooperation with other academia and partners as the UN University, but also ETH Zurich, for example. Now, knowing the relevance of climate risk and that not all of this risk can be actually reduced, but also needs to be managed, and remaining risks, for example, be addressed by climate risk insurance, we have the possibility to fund the concept development for new insurance solutions. And as a third instrument, then also co-fund the development then of the specific products that have to been suggested and developed in these new concepts. Now, the ZIF actually is of great value in our activities because, first of all, in identifying local partners that are interested in developing these new solutions. And this, for this background, the InsurResilient Solutions Fund actually requests partners to submit proposals as a joint partnership, representing the demand and the supply side. And here, it is very key actually to have the local partners involved right from the beginning in developing these new solutions in order to have actually the needs and the local context that is to be addressed by these new products included right from the beginning. So the ZIF actually represents the opportunity to identify and build new partnerships that would then actually develop these new products in a joint partnership. The second area where I see a great value in the ZIF is actually developing these concepts together with the insurance sector and bringing these partners together, specifically for the MSME sector. Now, we've heard several times, Jürgen Sackler has mentioned this, but also other colleagues, how important the MSME sector is for the economic development. Now, representing about 80% of the GDP, you would also expect that a high number of these proposals being submitted to the ISF address these risks for this sector. But instead, the contrary is the case. Amongst the almost 200 applications that we have received since beginning of 2019, we have seen almost 50% of these concepts addressing risks in the agricultural sector, and only about 10% of the initial concept notes being submitted addressing risks for infrastructure investment or then MFI portfolios that would then protect the MSME loans of these financial institutions. Therefore, we see actually the pipeline development with ZIF as a key additional value to further extend the access to climate risk insurance for the MSME sector. Third element is supporting the submission of project proposals to different financing mechanisms. I think that a well-developed concept is a prerequisite, then also to have a clear objective and also have a clear view on what actually should be the product that is to be developed and supported by the ISF. And last but not least, of course, with the product development, we still don't see an impact. Now, ISF projects end actually with the development of this new product. But what is key then in order to have impact in the long term is also accompanying the implementation and then also building capacity and literacy in the MSME sector in these countries in order then to scale up the insurance solution and access to these new products. Now, why am I so enthusiastic and also convinced that we have these common interests is because we share the same priorities when it comes, for example, to target group. Being a V20 group-led initiative, we share the same target group of the poor and vulnerable population in our partner countries. And last but not least, second priority I think that we share is actually mobilizing the private sector. On one side, of course, in the insurance sector itself, with the local partners and the capacities of local insurers on one side, but then also the local MSME sector that is key for the investment and resilience, building resilience in our countries. So next steps, how can we make it happen? Well, first of all is that we do have our call for proposals open still until December, but also in next year we will probably see another 2 calls, and we're really looking forward to then proposals being submitted with the support of the ZIF. As another also potential cooperation that I would be very happy to further have a dialogue with the colleagues from the ZIF is actually in the area of climate risk analysis, where we see that there's still a lot to do, specifically with the MSME sector not being so much really reflected in these analytics so far. So thank you very much again, and I wish you all the best for launching now the initiative, and thanks again for having me.
Thanks so much, Annette. I think we need to get that project office up and running, because I'm happy that we record this, because you've outlined a lot of homework for that project office already to kickstart once we get going. But really important to show how a solution-seeking fund like ISF is bridging supply and demand, and have very concrete ideas already there to get this going. Thank you so much, Annette. And last but not the least, I haven't seen Jerry's keys for some time right now. The last time we saw each other was in Geneva, I think, and then, but that was years ago. Jerry, I'm so happy to be reconnected with you. You've been so patient, waiting for your turn, but obviously you have a lot to say on this idea, but you have been the brains behind global parametrics and the strategy behind it, but conceptualizing it. Now there's now growing sophistication on risk financing solutions out there. What's the global parametrics view on this?
Oh, well, let me start again by congratulating the team. I participated in the New York activity 2 years ago. The progress since then is fantastic. So I've got a lot of enthusiasm for this program. And it really brings together a lot of linkages. And that's what I'm going to speak to, because I think that's the most important thing about partnerships and collaboration. Of course, I hope everybody on the call recognizes that Global Parametrics was supported by FCDO and BMZ. And we manage a natural disaster fund, NDF. It's got British capital, German capital, and we do that alongside Hanover Re. But what I'm really enthused about is all the discussion today are things that, I've been on this journey myself for many years, working in various places on the planet. But what's so important is that people understand the risk, they take ownership of the risk, and then they have to actually manage those risks. And this is what chief economist of used to be DFID, Stefan Derken, was always preaching, is in his whole mantra of how you actually intervene and build programs that are meaningful. So what's so important here is that we're addressing the most important segments of society, the small and medium enterprise. And I want to emphasize a couple of things. One is these climate shocks don't impact a business only 1 year. It's multiple years. And it changes their income profile. It changes their growth trajectory. So there's actually a solid business case to be made for actually taking on these kind of disaster risk financing solutions. And I want to be clear, I'm not using the word insurance. And the reason I don't use insurance is because disaster risk financing includes structured approaches for the client to actually retain some, for them to have access to credit and then transfer the risk into global markets. And that's the way we work. What I want to come back to is this cost of capital idea. Please appreciate that climate shocks by themselves, looking back over recent years, add 117 basis points to the cost of capital. Just consider that. How do you think a small and medium enterprise can manage whenever they're facing an additional 100 basis points or more? And that's looking back. That doesn't include seismic risk. It doesn't include pandemics. It's not considering that extreme weather events have increased 5 times over the last 50 years, according to the recent UN report. So looking forward, what are we looking at in terms of cost of capital? There's an absolute solid basis in business case. Now I want to change the tenor of the conversation just a bit, because what I'm working on today is how we can bring a missing element of the development community more in tune with all this discussion, and that's the development financial institutions. The British government supports the CDC. We have the Dutch government supporting FMO. We've got DEG in the government, in the German government, IFC. So there's many of these, and here's the important thing for you to recognize. Overseas development assistance grew 50% from 2000 to 2017. Development financial institution and investments grew 800%. And today we're talking about $90 billion being invested in small and medium enterprise, a variety of investments on the planet in the countries that we care about, exactly the conversation we're having here. And what I want you to also recognize is that for any country on this planet that's made progress with insurance for property and casualty, there's been 2 conditions that have needed. First, the regulator has to say, doggone it, guys, you need to protect yourself. There's almost mandatory insurance in a lot of jurisdictions. You can't get a home mortgage in my country without insurance. And that's true for most developed countries. And then you have subsidies. The development financial institutions are in a position where they could take a high level of risk, they could layer it out, and they could work with the funds they manage and the investees in a way where they perform those functions. So I want to connect that dot very strongly in this conversation here. Because remember too, the development financial institutions, they invest in energy, agriculture, financial institutions, nature-based solutions. Even now, the British government is working alongside CDC, FMO to invest in reforestation and forest protection on this planet. A critically important activity that involves de-risking that flow of capital. So with those comments, absolutely, Global Parametrics is in a great position to work with this team. We've been having conversations with them for some time. This is what we were built to do. The piece we were missing was we weren't taking the heavy lift that you guys have taken to actually build that into a country profile and work with country ministers. We were doing something different to work with fund managers and investment vehicles on a global level. So this completes a really important linkage for us of, just like Annette just said, you know, the fact that you're working with the ministers, you're working in the countries, we're working on the same trajectory, that if we can protect the businesses that actually support the poor and vulnerable, and we can rebuild their balance sheet quickly when there is a climate shock, we can create business continuity and we can actually reach the poor and vulnerable in ways we've never dreamed of. And we can do it much faster if we can persuade the development financial institutions that they have an important role to play in this process as well. So I'm very happy to be here today and participate, put on a tie just for the event, because otherwise I'm not wearing a tie in the office. But it's so good to see everyone, and congratulations again. Thank you.
Thank you, Jerry. You haven't missed a step after all these years. We're due for a catch-up, a long overdue catch-up after some time. But thank you for making it crystal, the argument about cost of capital and how that really homes in into a business case. And secondly, for weighing in on the role of DFIs or development finance institutions in really making this work and amplifying this work over time. Thank you so much. And thank you to all of our panelists for speaking today. Now for closing remarks. Sadly, we have come to the end of the line. Let's welcome back Amal Krishna Mandal, Joint Secretary at the Ministry of Finance in Bangladesh, for some closing words, and then I'll just say a final word after that.
Excellencies, finance ministries of the V20, representatives from the G7 and G20 countries, head of international financial institutions, multilateral development banks and partners, ladies and gentlemen. I am pleased to bring you to the close of this program. My profound congratulations to His Excellency Branson Weiss, the Honorable Finance Minister of the Marshall Islands, and Her Excellency Maria Flaxbart, the Honorable Parliamentary Secretary of Germany, for their leadership and support in the delivery of the Sustainable Insurance Facility. My congratulations to UN Environment, Munich Climate Insurance Initiative, Asian Development Bank, and Insure Resilience Global Partnership for the progress so far. We look forward to being kept up to date on progress during the V20 senior officials meeting. The SIF marks a key step to support members of the V20 to protect our asset base, secure supply chains, and maintain output and price stability in line with a future-proof economy, as set out in Bangladesh's Mujib Climate Prosperity Plan. We hope to ensure long-lasting and intensified collaboration through these new implementation initiatives and to force a joint understanding of priorities, ambition, and value perception in the context of risk and resilience. Thank you. Stay safe.
Thank you so much, Joint Secretary. And just as a final word for me, I just want to recall the words of Prime Minister Mia Mottley from Barbados last week on that powerful speech about 1.5 to survive and thrive. And if there's anything that I picked up from the discussion today, I want to bring to light what she said during that speech at the opening of COP26 last week, which is many hands make light work. And I think that is the spirit of the V20 SIF right now, the collaboration that's happening between the public, private sector, and other parties involved to really home in on the solutions that we need to build resilience on the ground where it's needed most, and to actually also support the net zero transition. So on that note, on behalf of the V20, my colleagues at the Munich Climate Insurance Initiative and the Insurance Global Partnership and the UN Environment Program, thank you so much for joining us. The work is cut out for the SIF, and we look forward to working with all of you in the coming months and years. Thank you, and have a good day and good evening to everyone.